Hi, I'm Norm O'Neill with Keller Williams Realty, and today I'm visiting with Pat Cunningham with Maple Avenue Home Loans to talk about your home purchase options. Pat, tell us a little bit about yourself, and thank you for having me to your office.
Of course, yeah. Norm and I are old friends and worked together, for a while in the Northern Virginia real estate market. So glad you're here. This company, I've been in the lending business here for a couple of decades, but we started this company around January 1st of 24. Similar work to what I've always done. We offer conventional loans and kind of just mainstream financing in Northern Virginia, Maryland, DC, and a couple other states that are close by.
Yeah, you've always been great to work with. My clients love working with you, Pat, and I love all the options that you have in the mortgage lending space. That's why we got together today to ask some questions of one another and share that with you, as I'm sure you have similar questions. And what are some of the loan types that you could do for a buyer, Pat, that people come to you for?
Sure. The major ones that we do in this area are conventional lending. That's loans where we get the guidelines from Fannie Mae and Freddie Mac.
Yeah.
FHA, which is Federal Housing Administration.
Beautiful.
VA, which is Veterans Affairs. We have a very high percentage. We have a very high veterans population in this area with active duty and also with a lot of retired military kind of hangs out in this area. So those are the main, and then above and beyond what Fannie and Freddie will do, we'll do some jumbo lending since we're in a high cost area.
Sure, and I don't know if a lot of folks understand what jumbo loans are, but what's the jumbo limit for our area? Above a certain number, you're into jumbo territory, is that right?
Yeah, and they're going to they change it like every December, so it's going to go up from here. But this year, it basically is $1,150,000.
Wow.
So that's a round number. It's actually a couple dollars less than that, but you can actually borrow up to that, and it's not considered jumbo.
Well, I think I understand. Folks at home may not understand. With jumbo, you're actually in a higher than your 30-year advertised rate, right? That's a little bit higher than what you might see advertised.
It can be. What I find that's mostly higher is the guidelines can be a little bit more restrictive with jumbo.
Makes a lot of sense.
Probably need more money down.
Mm-hmm.
A little bit less flexibility on credit and things like that because we don't have the federal agencies backing those loans up. So there's less liquidity in that market. So the guidelines tend to be tighter.
That makes sense. I'm imagining when you get together with clients, you discuss like a financing strategy, probably show them different options, and you want to learn what their experience is with home loans as you show them how they can purchase a property. Is that right?
Yeah, we're usually trying to integrate what they qualify for with what their kind of personal budget is, because those could be two different things. They could match up exactly, but that would be rare. So it's more like getting to know them, hearing what they can do from a cash standpoint, what they're willing to do from a payment standpoint based on their budget, and then trying to make a loan plan, give them a couple options to satisfy what they're trying to accomplish. Because there is a balancing between payment and down payment.
That makes a lot of sense. I mean, who doesn't like more options, right? Another thing I hear about a lot is interest rate lock, things of that nature, and also hear about interest rates at kind of variable rates. Can you speak to that a little bit? Like, when do I lock in an interest rate?
It's a common misconception. You lock in a rate really when you get a home under contract. So if I'm coming to you and you're selling me a house 3 months from now, we have to just look at what the market average is. The rate's not set. There's some what we call lock and shop programs where you get a set rate for a certain period of time. They're typically really gimmicky and expensive. So we don't use them. We'd like to use them more, but the traditional way of getting a mortgage is you go find a house, you get it under contract. Norm helps you get the deal ratified with the seller. Now you know you're moving forward and closing in, say, 30 days. We lock the rates for that time period. We usually lock them up to 60 days. We have longer locks for new construction and things like that. It's just on your typical resale stuff, we don't need more than 60 days.
I love it. So another question I hear all the time is mortgage insurance. When does mortgage insurance come into play in this?
Yeah, so we can't get a loan approved, a conventional loan approved without a mortgage insurance policy if the borrower is borrowing more than 80% of the home price. So I know this doesn't apply to Northern Virginia, but if you're doing a $100,000 home price, if you're borrowing more than $80,000, so in other words, if your down payment's $5,000, $10,000, $15,000, there would be some form of mortgage insurance. It's priced based on risk. So the more you put down closer to that 80% threshold, the cheaper that mortgage insurance is. So people don't like paying private mortgage insurance, but a couple things. It's gotten way cheaper, and I'm not like a private mortgage insurance salesperson. It's a tool for us to finance more than 80% of the home price. So without it, the down payments would be much higher, and as you start to creep down towards that 80%, it starts to go down.
Makes sense. So it's something that kind of varies depending on a unique situation.
Yeah, and people always wonder how long they have to pay it for.
Yeah.
And the answer is really a couple of years. You got to think about if I'm paying it, it's going to be a couple of years. I would just, it's much cheaper than it used to be.
Love hearing that.
In the present market. That
Right.
could change if there's a lot of defaults, people aren't paying their mortgage back well. It would be like car insurance with a lot of crashes. It would get more expensive. But right now, it's as cheap as I've ever seen it.
Cheap as you've ever seen it. I love hearing that.
Yeah.
What about, closing costs? A lot of folks hear about, I've got my closing costs. I don't think a lot of buyers understand that in addition to the home purchase price, there are closing costs associated with the loan that they may need to cover in order to fulfill the loan. Is that right?
Yeah, it's like even if you're not getting a loan, if you buy a property in Northern Virginia, that deed is going to be recorded from the seller to you as a buyer. There's costs at the county level, state level. So there's a lot of different parties involved with buying a home. Your realtor, a title attorney, the state and county want to know what's up and they want to get compensated. It's called a recording fee. So we know what those costs are, and we will map those out for you based on the home price you're buying and how much you're borrowing, well in advance of you buying. So part of the mortgage plan is you understanding and having clarity on that.
Yeah,
so you can make a decision. So you can make a decision, can I move forward or not? I know what my down payment is, I know what my payment is, I know what my closing costs are.
Excellent, because I don't know if you guys caught that, Pat's going to give you the numbers right up front that allow you to make plans moving forward. As you can imagine, it's a pretty crazy time in a purchaser's life, a seller's life. Pat will give you all the information up front, allow you to calculate a plan that works for you. And I wanted to share this too. Sometimes, depending on the market, those closing costs that Pat spoke about, myself as your agent, I can get the seller to cover some of those closing costs. And it's very dependent on the market. The good news is that's a conversation we should have to help you offset some of the costs. Let's say I'm getting approved for a new loan, Pat. What do I need to get pre-approved with you? How do we get the process started?
Yeah, usually just a phone conversation or an in-person meeting. I mean, we have an online application.
Excellent.
We can direct people towards, so they can fill things out at their convenience. But we want to have a discussion once I have that information.
Yeah.
So we're either taking it by phone or you're filling something out online, but either after that we get into the mortgage planning discussion. And then as far as documents and things you need, we have to, when we're putting a loan file together, we have to do what's called supporting documents. So if I say, Norm works for the CIA for the last 2 years, I need to provide paychecks and W-2s and things like that demonstrate that you actually work there and what your income is. Same thing with the assets. You're putting a certain amount down payment money down. We need to document where that's coming from, that it's your money, and that you have some left over. Surprisingly, you don't need as much as you think, but especially when you get into the jumbo loans, you start to need a lot of reserves and things like that. So that's usually a couple of months of bank statements or an investment account statement.
Makes sense.
For the last couple of months. On top of that, I would say the other form of stuff that we need is if people are self-employed, we need a couple of years of their tax returns. And when you're self-employed, your income varies. Mine does too. And we take a federal tax return the last 2 years and we kind of average that out to establish an income, because you don't have a steady paycheck at that point.
I gotcha. So you're going to work with the buyer, the purchaser through those steps to get them rock solid so they can go out and purchase. Let's say somebody came to you, they've got all their ducks in a row. How long before you could give them a letter and green light them for that you could fund their purchase loan?
Yeah, same day.
Same day?
Yeah, as long as we have the corresponding documentation. We do get a credit report, but if we've done the interview or have enough information and we have the credit report and the supporting documentation, we write an approval that day, and we don't want to dilly-dally on that because we're competing against other banks and credit unions.
That's
and
right.
Rocket Mortgage, and a lot of people want your business. So
They want the business.
we try to be accurate but quick, so you
Yeah.
can get out and so you can get clarity and confidence on what your payments are and your closing costs and what you're actually approved for, so you get back out with you to do the fun part, which is find the house.
The fun part, finding the house. Exactly. You know, when you're finding a house these days in the marketplace, there could be a lot of competition. And with multiple buyers going for the same property, who you're working with throughout the process really matters. That's why I wanted to ask you, Pat, when you write a loan approval, your clients are starting to make offers, how often are you contacted by the listing agent to verify the buyer and kind of get that warm, fuzzy feeling? Mm-hmm. I would imagine that's pretty critical and would also bolster that buyer's reputation in the marketplace just by working with you and you giving that confidence to the seller's agent that, hey, Mr. and Mrs. Buyer right here are good to go. Does that happen pretty often?
It does. I mean, I think the agent that people have, you, is super important to get that conversation started and basically get the deal almost sold. But I would say probably 70 or 80% of the time, the listing agent
80%.
does reach out. And I think it's a little crazy if they don't reach out.
Yeah.
And they want to verify what we've checked. And we don't get into like your private info, but we'll tell them, Norm's super strong. We've reviewed his credit. We have his assets. We have his pay information, and we know that we can close. And we want to be really responsive to that, within minutes of them calling, because
Absolutely.
There may be multiple offers. The other offer might be, a big bank or credit union that's not getting back to them. So we want to find ways from a financing standpoint to help your offer differentiate from another offer without you grossly overpaying. Because that would be one way, right? Just pay 50 grand more, but that's not, obviously optimal for the buyer. So what can we do to strengthen the offer and make it more likely to be accepted in a competitive market?
Those little things can make the difference and help you win a bid. One other question I had, and I get a lot, is once you give somebody the pre-approval, let's say I find them the house that same day, everything's looking good, how fast could we go from contract to the settlement where the buyer's actually signing, receiving keys, and owning that property?
Yeah, I mean, from a regulation standpoint on conventional loans, it's 8 days.
Okay.
Now in reality, it's probably more like 12 to 14, and we've done a couple in 10 days.
Sure.
But I'll just explain that a little bit. There's some documentation that a buyer gets on day one when they say they want a loan, where the government says you're not even allowed to close now for 7 days. They don't want people hustled through, not seeing their numbers and stuff like that. But anyway, we try to equip people to be able to close within a couple weeks, because when you're able to close that fast, you're making yourself almost like a cash offer. Even if I make a cash offer on a house, I still have to go get my money. The title attorney is going to do the title work and check things. I'm not just going to usually write a check that day. So even a cash offer probably doesn't close for, what do you think, a week or two? Or
yeah, a cash offer is still going to take some time to do the underwriting. So you're definitely a week or two.
So we're trying to match.
options.
If you're financing, we're trying to get you as close to cash as possible, and we can do that with closing in a couple weeks.
Beautiful. Closing in a couple of weeks, keep you competitive, almost just like a cash offer. So a question for you around what happens after I go to closing? Am I making my monthly payments to you, or who am I going to hear from after I purchase a property?
Yeah. Well, with us, we have servicing partners,
Servicing,
that's kind of the norm in the mortgage industry. So,
Yeah.
if you go to a mega bank, you may have your payments stay with them. Although with 30-year fixed mortgages and 15-year fixed and conventional mortgages, they always have the right and ability to move them somewhere else. And I call them payment takers or servicing companies.
Servicing provider, yeah.
Yeah. So there's big ones that take payments, and this is what they do. Our company has to have a relationship with them where we'll transfer the servicing to them. So you're not really paying. Sometimes you'll pay Maple Avenue Home Loans one payment, but a lot of times we'll just tell you right away that one of our servicing partners is going to be taking the payments. They're good at it, and they take it off our books. And that's the norm in mortgage banking.
Mortgage banking. A couple questions I always get asked is a couple things like, is there a penalty if I want to pay the loan off early? Is that standard? How does that work?
It's not very common right now. It used to be on some loan products back in the day. It was more common. Nothing that we've talked about today yet would have a prepayment penalty on there. What's cool about mortgages, the ones we're talking about for regular home buyers, is you get a loan, you know what your payment's going to be forever. Let's say you have a 30-year loan. You always know what that principal and interest is going to be. Now your taxes and insurance could vary a little bit.
Sure.
Property gets more valuable in 10 years, your taxes are inevitably going to probably be higher. But your payment's always going to be the same unless you decide to take a new loan. So if rates drop enough where it's beneficial mathematically for you to take a new loan, you get an option you get a one-way option in your favor as a borrower, where you can take a new loan and cheapen it up if the market cooperates with you.
When you say take a new loan, you're talking about refinance. So you can refinance. I'm sure you've heard about this out in the public, but so refinance, you can do that without penalty on a loan that I got from you. You can even help me probably refinance it into a new product.
Yeah, we do that all the time, and yeah, no penalty whatsoever. It's just you as a borrower, and we'll help you with this. You're just trying to calculate, okay, if I'm saving $500 a month, what my closing costs are of taking that new loan, and then deciding whether it's worthwhile or not. And usually the entire goal is just how quickly can I recoup my closing costs? And if it's within 24 months, it's usually a green light.
Love that. So it sounds like to me, like even after we get the process closed, you're my go-to person when I'm calculating financial numbers, making a strategy for next steps. Even a next purchase, I should reach out to you. You can run the numbers for me and tell me where I am, in the big marketplace.
Yeah, it is what we do, and as long as we're licensed in that area. If you say you're moving to Alaska, I would say we don't have a license there, but I can try to find you a friend in the business that's reliable. But yes,
beautiful.
We want to stay in touch for life, whether it's a refinance or to help you with the next purchase or help a family member that needs the same services.
Rock on. That's it in a nutshell for me. Pat, did you have anything else that you feel like we should convey?
Well, I wanted to get your opinion on, what the market's what you think is going to be happening in 25. I know it's been great for sellers, harder to buy. I only work with buyers, so I'm always curious to know how our buyers are going to be doing. In your opinion, what are you seeing in Northern Virginia and some of the markets you work in?
Sure. Well, I appreciate you asking that, Pat. And one of the things that you can do this time of year is see what you think is going to happen in the spring market. Right now we're going into Q4. We're about to start the holidays, and there's always a spring bump. 2025, right out of the gate, it's going to start sometime around March 1st. January and February are slow. To your point, or to your question, I see things probably shooting up just like they have been for the last 3, 4, 5 years, with a 5 to 10% bump in property values as we roll into 2025. I say that because we're still in that many of the same factors that we've had up year to date. Is a lot of folks in our area refinanced or made a purchase with a interest rate that's below 3%. That causes a little bit of difficulty because you can't get 3% anymore, can you?
Nope.
With those 3%, property owners with mortgage, they're not moving. In fact, if they try to move, their payment will probably be higher for less property. Those people are not moving. In our area, there's not a lot of new housing inventory, so we're seeing still a struggle for homes for buyers to pick from. Good thing that they're getting approved by you, because there will be competition as we jump into the spring market. I can guarantee it. There will be competition for properties. And that's where you really want to get in depth with your agent, start communicating with everybody on your team to come up with a strategy to help you beat out the other offers.
You sell properties and you work with buyers. How often in advance do you encourage people to get with you to start the planning? Let's say I'm older and I need to sell my house and downsize or whatever. When should they talk to you?
Yeah, that's a really great question. And in fact, I would say call me right away. You can never reach out too early. And Pat, the reason why I say this is it can be a lot of work to get a property ready to go to the market. You mentioned tracking down those forms they're looking for. Maybe there's some personal things they need to take care of before they can get there. And it's the more time you have, the more lead time, it just allows people a little bit more planning, feel a little bit more comfortable with the steps they're about to take. It's 6 months, it's certainly not too early. If you're thinking about spring market, right now we're about 4 or 5 months away. Perfect time to sit down and learn about all your options.
If I'm selling my house, and let's say it's an older house, what's your kind of process with what options do I have?
Yeah.
Let's say it's an inherited house, or maybe I just haven't taken care of it or haven't done able to do as much work as I probably should to get it market ready? Like, is that part of the discussion, and what kind of options do you offer?
Love that you brought that up, because it's a little bit of a different process working with buyers and working with sellers. Both camps I recommend getting started as soon as you can, 6 months, definitely not too soon. To your point, a lot of sellers, when they're thinking about getting their home on the market, a lot of folks could be a little bit embarrassed maybe. They haven't done or kept up with the upgrades, and they think that they might have less of an option to get the home sold on the open market. And then the very next question I get is, as is. Can I sell this puppy as is?
Yeah.
I want to sell as is. And
So a lot of people that they want to do that?
They want to do that because they really don't want to put any more money into the property or try to fix it up. And they're a little potentially stressed about bringing a property to market. The time to do this, though, is let's get together sooner so I can give you all your options. Option one would be, no repairs, maybe some light repairs somewhere in the middle, and then maybe I introduce you to a contractor and we do a full, something a little bit more major at the property. I can show you what you could expect to sell it for in every avenue, and about how much time, how much money, and what kind of cost experience you're gonna have going these 3 or 4 different routes.
Yeah. If I have money, I would have no idea on if I put in X, is that gonna translate better for me upon the sale? You can help with stuff like that?
I could totally help you with that, because I know teams of contractors that can come out and give us estimates or get the job done. Well, here's the good news. Once we do make a property almost like new, the buyers fall in love with it. The number one thing you can do for a property besides price it right is to have the condition at a 9 or a 10. Everybody wants a clean, nice property. Those are the properties I see selling for the most money possible. I can certainly give you advice on how to make that happen for yourself. And then we could also do an a la carte option, which we take and put things on the table that work best for your situation. Yeah, well, I'm Norm McNeil, Keller Williams Realty. This is Pat Cunningham, Maple Avenue Home Loans. We appreciate your time.